Hello, welcome to the new episode of True Fraud. My name is Pablo Torres. I'm your host. And today we're going to talk about the risks associated with recurring transactions. If you want to learn more about how to mitigate the risk of your business, you can go to withreach.com. Before we jump into it, I think it's a good idea to define what are recurring payments, aka subscriptions. I think these have been around for a long time now, but they're definitely getting a lot more traction lately. The reason for that is because there's a lot of businesses nowadays, could be digital, SaaS, physical products, that are selling products that are being shipped or delivered on a monthly basis, right? If you have a digital product, it might be a digital license for some sort of software that you're selling or something like that. And then this type of solution comes very handy for your business. These recurring payments differentiate themselves from kind of like your one-time payment because the setup of these payments is completely different with your service provider. And without getting into too much detail, basically what's important to gather from this is that the information that your service provider or whoever is handling these payments for you is going to need certain details from your clientele and the people that are checking out on your website so that you can set them up for future payments without them being present. Commonly, these are known as, like if you segregate these recurring payments, you have your initial payment, which is customer initiated, and then you have all the subsequent payments that are basically a merchant-initiated payment, right? Or a merchant-initiated transaction, CITs and MITs. The reason why it's so important to segregate these is because there is a very tangible cost associated with the way that you're handling both of these. I guess I'll kind of digress a little bit. Having recurring payments with a business like a SaaS that offers a SaaS, this is a great way of locking in revenue where you don't need to, spend more money or spend more time thinking of how am I going to get people into my website and create that revenue. So that's number one. The other one is when you're locking in that revenue, then we're talking about transactions that you have already pushed through maybe your regular transaction monitoring. Right? So like if you have a fraud engine, there's a cost associated with it. And so when you are segregating the merchant-initiated transactions and the customer-initiated transactions, then maybe your fraud monitoring, or at least that kind of like bigger umbrella of the first checks that you're going to do them right at the beginning when you're setting up that subscription model for that customer. And so when you have that fraud engine that's going to be looking at, like the device fingerprint or like any other criteria, and then you're going to be kind of mixing it with the data that's available from other clients, then this is kind of like the brunt cost of generating that future revenue. And so when you complete that analysis for that customer initially, and they have gone through all the red flags, I guess, if you want to call it that, of your system, then you know that any subsequent payment that you're going to get from that is going to be something where the risk profile of that transaction has been brought down to a minimum. The only risk associated with those transactions at that moment would be linked to maybe account takeovers, which, of course, there's got to be some sort of sign-in, sign-ups, monitoring for that matter. Or maybe there's a concern with the quality of the product, or maybe the link that you provided doesn't work anymore, it expired or something along the lines. Then those could still generate a chargeback, right? Or a dispute at that point. But from a fraud perspective, then the risk associated with this new revenue has gone from 100% to maybe 10, 15%. So it is definitely a good way of diversifying the revenue that you're getting, that you're drawing to your business. So some of the special considerations that you should have when you're looking at this type of volume. So you're looking at transactions that, like I mentioned, the first transaction is going to be the one that carries the higher risk profile for the payment, right? And then once you establish that monitoring and you have gone through all the checks with that payment, then any subsequent payment, you're going to be treating it in a very different way, which means that maybe you may not be doing the same fraud checks that you were doing with those initial transactions. And that also means that because of that, maybe you're not running them through all of the checks that you normally do, or which could also translate to maybe different types of engines that you're using to identify fraud. And so by doing so, then you can minimize or lower that cost associated with those payments. Also, because you're not looking at that data, then it gives you the time to focus on anything that's net new, knowing that the risk profile of the payments for these relationships that you're establishing with these clients are basically risk-free, if you want to call it that. Recurring transactions is definitely a great way of generating clean revenue for your business, especially when you know what you're doing. Recurring transactions or recurring revenue, it's kind of a bit of a double-edged sword. When you're looking at the way that maybe you're handling your business, if you know what you're doing, if you know your product, then you know that the quality is there, you're providing good customer service, then yes, absolutely, your risk, that risk profile that you're looking at on each payment is significantly lower. If you're just providing subscription model for the hell of it and just to get more money, but you're not kind of backing up the quality of the product, you're not providing good customer service, there's nobody that's answering calls to, ask where the product is or how they can use it, or, maybe, like I said, if it's a SaaS, then the link that you provided initially is not valid anymore, it expired. There's many ways of kind of messing things up when you're offering a product like that, right? And so when you know what you're doing, then that's just clean revenue. When things get ugly, they get ugly very fast, because it normally is not going to be kind of like a one customer, one issue. It's going to be 20 customers having the same issue, right? And so if you don't take care of things, then it's kind of like a snowball effect, right? This is why, knowing your customers and understanding their purchase habits and understanding what they're looking after with your product provides so much insight into how you can scale your business up. When you have a product that's giving you a lot of headaches and you're offering it in a subscription model base, those are normally going to translate into not just one chargeback. It'll translate into the chargeback for the transaction this month, and maybe depending on how often you're doing it, like if you're doing on a bi-weekly, monthly basis, it could translate into the payments or the products that they bought through you, like 2 months ago. So one complaint could turn into 3 or 4 different chargebacks from the same customer. So if a customer, for example, they're unhappy with the product, the quality of the product, the service, or something like that, they could go back to their bank and say, you know what, I've been dealing with this product, this merchant specifically for the last 2 months, 3 months. They're not helping me. I want my money back. They're not just going to go back and do the first payment, like you're going to show the bank that you've been trying to fix this issue with the merchant, and the merchant is not helping you. The bank will 100% back you on that, and they'll file disputes for the 2 or 3 payments that you already have going through them. So there's certain types of merchants nowadays that, as you're going through the checkout flow, you don't realize that you're getting into a subscription model, which is very dangerous, right? Because you expect to see maybe a single time payment on your bank account or your bank statement, and suddenly, 2 weeks later, you get another package, or maybe a month later, you get another package, and you get another charge, And so you as the buyer, you're wondering, okay, so I do recognize this first payment for $20. Why are you charging me another 60 on top? And it's because at the time of the checkout, this subscription model that we're talking about wasn't clear enough for the buyer, and it wasn't, I guess, expressed clearly, and it wasn't displayed clearly on the screen for the buyer, for them to be able to either opt in or opt out of it. Now, the FTC is taking steps into, making sure that all of the merchants that are offering this type of business model, then or programs, I guess, they're making it so that customers, they're trying to empower the cardholders so that they can go to the website and they can cancel their own subscriptions, which I think is a great way of dealing with it. There's the other side of that, right? So if the FTC is doing this, then I'm sure that there's going to be a lot of merchants that are going to say something like, oh, well, anyone can go into our website and they can cancel their subscription. So let's just offer it to everyone and make it kind of ambiguous for the buyer to understand if they're getting into a subscription plan or not. And then, you're going through the checkout. Suddenly you didn't even realize it until the second month, and then you get another charge, and then you're like, oh, well, I already have the goods. Now I'm just going to go and cancel that subscription, which is kind of crazy to think about it that way. But that's how a lot of businesses operate these days. And the disadvantage for the buyer is that you're getting another box with more product, but it's something that you didn't want or need initially. And in addition to that, you're going through the expense, right? Like you already spent the money. And a lot of people just think of it logically as in like, well, I'll just keep it, cancel the membership or cancel the subscription, and that's it, But it shouldn't be like that. That's not, I guess, an ethical way of operating. Yeah. If you're a merchant, if you're a business that's offering this type of service, I guess, it is very important to know how you're going to address these type of situations, especially with the changes that are coming up for Visa with the new VAMP program. The chargeback ratio or how it's going to be calculated with the new program is slightly different from, or rather very different from the previous programs. Now, we're not looking at, kind of like a fraud program separated from chargeback program. We're looking at everything combined. We're also looking at, for a merchant that has maybe that is using RDR or CDRN or one of other verify other products, then those disputes are not going to count towards that. However, not all payments turn into a chargeback. And so the clear example that, as we were talking about earlier, is that customer that gets that second box and they're like, I didn't want this, I don't recognize this merchant, this website scammed me. And maybe they'll call their bank and they might report the transaction as fraudulent, but maybe they won't file a chargeback because they'll think, well, I have the product here, I just wanted you, bank, to know that I didn't agree to this. And so those transactions that are reported as fraudulent that may not make it as a chargeback, maybe the merchant refunded it prior to it turning into a chargeback. Those are called TC40s. And so all of those make it into that count. And that's where an e-commerce business could get into trouble when calculating the new ratio with the VAMP. You can, if you have a business that's offering a subscription model, then you can make it work for you, with you, and not against you, in the way that if you are providing clear information for your customer, your buyer at the time of checkout, and they know clearly that they're getting into a program, into a regular payment program, you're empowering them to make that decision. And when they know that they're getting into something where clearly, by they accepting that they're going to go into a subsequent payment program, then that means that they also trust that the quality of the product or the service that you provide is there. And so that just adds that much more value to what you're offering, right? I don't see people going into a website and kind of wondering like, oh, I wonder if this is good or not. And then just, yeah, I'll take a subscription for the next, 20 years of my life on a product that who knows. So I think when you're providing clear information for these customers at the time of checkout, then you're empowering them, you're making them or guiding them to make an informed decision. And then, of course, that means that normally that type of clientele will stick with you. And then, again, that risk profile of that customer in general, not just that transaction, goes way, way down. On the other hand, you can make it work against you if you're tricking customers into getting into some sort of subscription, and then you're not making it very clear, and you're also not providing enough information as to what the payment cycle is going to be. And then those can turn into chargebacks. So you're going to affect the reputation of your business, but you're also going to be generating a wave of chargebacks that could put you very well into one of the card network programs. With subscription models or businesses that offer products, whether they're digital or physical products, and you're going into a recurring payment plan, your descriptor needs to be so clear, because I am conscious that I am aware that I'm making a purchase in this moment. Next month, I'll see it, and then I might remember, oh, yes, I bought this. And then I'm going to get the package, right? Because a merchant is not going to ship a product that they haven't been paid for. So you're probably going to see that payment first, and then you're going to get the product a week later, 5 days later. Maybe it was already on the way by the time that they ship the order or that they capture the payment. If your descriptor changes because of some sort of issue with at the time of the capture of the payment, maybe the bank had some issues with their platform, the payload of the transaction or something like that, that could get ugly very quickly, right? So these people that have been buying and paying the same product for the last 6 months, they're not going to remember that they bought through you in that moment. They're just going to see something that looks slightly different, and they're going to say, what the hell is this? And so this is why being consistent with your descriptor, with what you're showing your customers in the bank statement, is so important. Providing information about what that payment is going to look like on their bank statement is critical. The number of times that I've gone and bought one coffee, and then I go back home and, I'm going through my papers or whatever, and then I see a charge and I'm like, $5 for what? Who is this? What is this? And then, like $5 doesn't seem like a lot, but somebody that's, kind of aware of all of this stuff, immediately I'm paranoid and I'm going into my head thinking, oh my God, somebody compromised my credit card. And then suddenly I'm going to remember, oh, wait, I bought that coffee. And it's just stress and friction that you're adding to your business that's 100% unnecessary and 100% avoidable. So a clear descriptor is, if you're the cardholder, you will see the descriptor. When I say descriptor, is the name of the business that you purchased from. And the reason why I say that sometimes it can be kind of confusing is because that business responsibility is to ensure that what they enter, so that the name of the merchant, the website, if it's a brick and mortar store, something like that, it is their responsibility to put that name so that it shows in your bank statement. And so sometimes when they're setting up their stores, they enter the corporate entity name, which is the reason why there might be a bit of a difference. Or they'll enter something else, maybe somebody's contact. I've seen this happen before too. And if the information they provided is not accurate, then of course people are going to start filing disputes for those payments. The descriptor is what you see in your bank statement. It'll say, like if you're buying, let's say, for example, good coffee shop in town, Phil and Sebastian. So you might see Phil and Sebastian's there. Perfect. You identify it, oh, I bought a coffee. The business responsibility is to ensure that that name that they want to display to customers is there in that bank statement. I have seen, and this is also kind of growing in popularity, where like the business is focusing more on the product rather than the brand of the business. And so they want the descriptor to have the name of the product rather than the name of the business. That's also not uncommon, because you might be buying something, like you're not going to remember the name of the store where you bought that Spalding basketball, special edition or something like that. But you will remember the product, and so they will put there, basketball or something like that. This happens when these business owners know that people will recognize the product rather than recognizing the brand. Totally okay. I don't see any issue with it. As long as the customer is able to understand and remember, oh yes, I bought this. Okay, perfect. Otherwise, then those are going to turn likely into chargebacks, right? Which you don't want to be dealing with. There's and I think we've talked about it on previous episodes. There's a cost associated with each chargeback, and it's not just the chargeback fee. There's people that are handling that chargeback. There's people that are providing evidence, submitting it, reviewing it, et cetera, right? So there's a lot more to it. Then there's also the part where, depending on who you're dealing with, and whichever platform you're using, or whatever type of integration you're using to run your business, your e-commerce site, there are different fields where you can enter different type of information. A descriptor is basically formed or divided in from different sections. One of them is the static, then the dynamic, and then you have kind of like the space for the phone number, or some websites prefer to redirect people to kind of like a contact us web form, and you'll see like a URL on that section. But the static descriptor, or the static part of the descriptor, will have likely the name of the business, and then the dynamic. If they're focused on the product, for example, that they're selling, they might want to play with that and then just kind of like change it. The word dynamics explains it, saying that it changes based on whatever the merchant is deciding to send with that payload. Now, some banks will take that information from that payload, and then they'll handle it properly, and they'll provide you the information as you send it in a way that you as the merchant know your customers, it will make sense for them. And then there are banks that every once in a while will just kind of grab everything and just say, no, not today, and then they'll just provide whatever information they want with it, right? It will still be somewhat related to your business, but it's not always going to be consistent. Recurring payments or subscription models, they're definitely a good source for revenue, clean revenue, if you are listening to your customers, if you're taking care of your business and the health of it, and you're addressing the concerns from your buyers, then it can really turn into something very positive to help you scale your business up. If you decide to neglect it, then of course it can turn into something that could bring your business down. Empowering your customers and providing all the information that they need so that they can make the right decision, and giving them the option to opt in or out of it is critical. Thanks for listening. Don't forget to share and subscribe. If you want to learn or know more about fraud mitigation and maybe business strategies to scale your business up, just go to withreach.com.
Brought to you by the Reach Network. Visit withreach.com/network for more.